Finalizing a mortgage is a significant milestone in the home buying process. It involves several steps, each critical to ensuring that the borrower secures the best possible loan terms and that the transaction proceeds smoothly. Before finalizing a mortgage, it's advisable to get pre-approved. This involves performing a credit check where your lender assesses your credit score to determine your creditworthiness. You'll need to provide documents such as income statements, tax returns, and bank statements. If you meet the lender's criteria, you'll receive a pre-approval letter, which states the loan amount you're eligible for. Once you've selected a lender and mortgage type, you'll complete the Uniform Residential Loan application and submit necessary documents to verify your income, assets, and employment. During loan processing, the lender verifies the information provided in your application. An underwriter assesses your financial status and property details to determine risk. The lender then orders an appraisal to ensure the property's value supports the loan amount. A title company checks for any issues with the property's title that could affect ownership. If everything checks out, the lender issues a conditional approval. You may need to fulfill certain conditions, such as providing additional documentation or clarifications. You can lock in your interest rate to protect against rate changes before closing. Closing, also known as settlement, is the final step in the mortgage process. You'll receive a closing disclosure or CD at least 3 days before closing, detailing loan terms, monthly payments, and closing costs. Carefully review all documents, including the loan estimate, promissory note, deed of trust, and closing disclosure. Be prepared to pay closing costs, which can include origination fees, appraisal fees, title insurance, and escrow deposits. At the closing meeting, bring a government-issued ID. Sign all necessary documents, including the mortgage agreement and deed of trust. Pay the down payment and closing costs, typically via a cashier's check or wire transfer. Once the documents are signed, the lender disburses the loan funds to the seller or existing mortgage holder and the property title is transferred to you, the new homeowner. After closing, there are a few final steps. The title company records the deed and mortgage with the local county recorder's office. Set up your mortgage payment system, ensuring you understand your payment schedule, due dates, and methods. Tips for a smooth mortgage finalization. Keep all your financial documents organized and readily accessible. Communicate clearly. Maintain open communication with your lender, real estate agent, and closing agent. Avoid major financial changes. Don't make significant financial changes, like opening new credit accounts or making large purchases, during the mortgage process. Review everything. Read all documents carefully and ask questions if anything is unclear. Be prepared for costs. Understand all costs involved, including potential unexpected fees. Finalizing a mortgage is a detailed process that requires careful attention to detail and thorough preparation. By understanding each step and maintaining clear communication with all parties involved, you can navigate the process successfully and secure your new home with confidence. Closing a real estate deal is the culmination of a long process that involves several critical steps to ensure the transfer of property ownership is legally and financially sound. Here's a detailed overview of what closing a real estate deal entails. The closing process begins with the signing of a purchase agreement, where the buyer and seller negotiate terms, including the purchase price, contingencies, and closing date. Common contingencies include home inspections, financing, and appraisals. Once the purchase agreement is signed, escrow is opened. A neutral third party, the escrow company, holds all funds and documents related to the transaction. The buyer deposits earnest money into the escrow account as a show of good faith. Ensuring clear ownership is crucial. A title company performs a title search to verify the seller's legal ownership and identify any liens or encumbrances. Both the buyer and lender obtain title insurance to protect against future claims on the property. A home inspection is conducted to assess the property's condition. The inspector provides a detailed report on the home's condition, noting any issues that need addressing. Depending on the inspection results, the buyer may negotiate repairs or credits with the seller. The lender requires an appraisal to determine the property's market value. An independent appraiser evaluates the property and provides a valuation. If the appraisal comes in lower than the purchase price, the buyer can negotiate a lower price or exit the deal. Securing a mortgage is a critical step. The lender reviews all financial documents and approves the loan. The lender will then provide a loan estimate detailing the terms, interest rate, monthly payments, and closing costs. The closing disclosure, CD, is a vital document. The buyer must receive the CD at least 3 business days before closing. The CD outlines the loan terms, projected monthly payments, and itemized closing costs. In the days leading up to the closing, the buyer conducts a final walkthrough of the property with their agent to ensure it's in the agreed-upon condition. The buyer gathers all necessary documents and funds for the closing. The closing meeting involves the buyer, seller, their respective agents, and a closing agent. In some states, this is done at a larger table with all parties present. In other states, the buyer and seller will meet separately with the closing agent. Check with your real estate agent on the policy in your area. You will also need to provide identification, review, and sign documents. Key documents include the promissory note, deed of trust, and closing disclosure. Transfer of funds. The buyer pays the down payment and closing costs, usually via wire transfer or cashier's check. After the closing meeting, the closing agent records the deed and mortgage with the local county recorder's office. The lender disburses the loan funds to the seller, and the escrow company disburses any remaining funds to the appropriate parties. Understanding closing costs is crucial for financial preparation. Loan origination fees, charged by the lender for processing the loan. Appraisal fees, cost of the property appraisal. Title insurance, protects against future claims on the property. Escrow fees, charged by the escrow company for managing the closing process. Homeowner's insurance, required to protect the property. Property taxes, prorated property taxes due at closing. Recording fees, charged by the county for recording the new deed and mortgage. Closing a real estate deal is a complex process that requires careful attention to detail and thorough preparation. By understanding each step, maintaining clear communication, and staying organized, both buyers and sellers can ensure a smooth and successful closing, ultimately leading to the transfer of property ownership with confidence. Congratulations on closing your real estate deal and becoming a homeowner. While the closing process marks the end of your home buying journey, it's also the beginning of your responsibilities as a homeowner. Properly managing and maintaining your new home is crucial for ensuring it remains a safe, comfortable, and valuable asset. Here are comprehensive post-closing tips to guide you through this new chapter. One of the first steps you should take after closing is to secure your new home. Change all the locks on exterior doors and update any security codes for alarms and garage doors. This ensures that you and your family are the only ones with access. Consider installing a modern security system. Many options offer features like video surveillance, motion detectors, and remote monitoring. Ensure all doors and windows are secure. Install deadbolts on doors and consider adding security bars to vulnerable windows. Make sure all essential utilities and services are set up and functioning properly. Contact utility companies to transfer services such as electricity, water, gas, and internet into your name. Ensure that all services are active and billing information is correct. Arrange for garbage and recycling pickup with your local service provider. Familiarize yourself with the collection schedule. If your home has a security system, HVAC, or other services, update the contracts with your information. Update your address with various institutions and entities to ensure you receive important correspondence. File a change of address form with the post office to forward your mail to your new home. Update your address with banks, credit card companies, and other financial institutions. Inform your insurance providers, health, auto, and home, of your new address. Update your address for any magazine subscriptions, memberships, and online shopping accounts. Notify friends and family of your new address. Regular maintenance is key to preserving your home's condition and value. Create a maintenance schedule. Develop a schedule for routine maintenance tasks such as changing HVAC filters, cleaning gutters, and inspecting the roof. Perform seasonal tasks like winterizing pipes, checking for drafts, and maintaining landscaping. Conduct regular inspections of major systems, plumbing, electrical, HVAC, and address any issues promptly. Consider purchasing service contracts for major appliances and systems to cover repairs and maintenance. Post-closing, being a homeowner involves more than just paying the mortgage. It requires a proactive approach to securing, maintaining, and personalizing your home, managing finances, understanding legal aspects, and building a strong community relationship. By following these comprehensive post-closing tips, you can ensure a smooth transition into homeownership and enjoy the benefits and responsibilities that come with owning a home. Your home is not just a financial investment, it's a place where you create memories, build a life, and establish roots in your community.